Hey guys, this is Mark Shawson, the pattern trader. If my eyes look a little glassy-eyed, it's because I've been kind of nursing a head cold for the last couple days, and I feel okay, but feel pretty wiped out most of the time. So excuse the dazed look. The question I most often get in the last couple of weeks is, how do I deal with these, low volatility, tight range FX markets? So for the last 6 or 8 months or so, the US dollar trading pairs have been tightly coiled in a huge trading range, bouncing up and down. In the euro, just a couple hundred pips. And very oftentimes these low volatility, sideways, range bound things, get the best of us mentally as well as financially. We end up just, paying the broker by trading in and out multiple times. As I've advised, my whole philosophy is really counter to, doing that. I am looking for the bigger moves in the market, but in order to do so, sometimes you just have to be extraordinarily patient. I've been advising our members for some weeks now to sit on the short side of dollar versus yen, and also go short the Australian dollar versus US dollar. And as you guys know, if anybody's heard me for any length of time, I'm a huge fan of the pound versus New Zealand dollar. And so I've just been sitting patiently in these positions. Yeah, they bounce up and down, but they are still very much in my favor. So again, I really advise trading, like a squirrel going in and out, in and out of a tree looking for nuts. The best way is to look at the long-term patterns, which indicate where these things ultimately will break. So dollar yen, Australian dollar versus US dollar look pretty range bound, but over time I'm pretty confident both these pairs are going to go lower. Similarly, I'm very confident that pound New Zealand will go higher. Now, pound New Zealand, especially with the Brexit news, has been buffeted 300-400 pips, but if you keep a small position and just stay the course, you will be rewarded. Now, yesterday, the RBNZ, this is the Central Bank of New Zealand, basically stated that they're going to keep rates low and may even go lower. So again, I've been very bearish New Zealand dollar for a significant period of time. And so people also often ask me, do I trade the news? And to my mind, the news is, behind, price is well ahead of the news. So I've been very bullish pound versus New Zealand dollar and bearish New Zealand dollar versus US dollar for a long time. And just because the central bankers came out and, confirmed that, to my mind, the price has always been indicating that. So, the event usually comes after price has indicated where it's going to go. So I advocate a longer-term horizon, a longer-term trading strategy, particularly in the current market environment, and certainly as we head into the summer period, which is always somewhat of a sideways trading affair. So I first look at the big patterns that provide the foundation for where this thing is going to go over the long term, and then I'm very comfortable just to sit in there. I hate to say it, but sometimes I don't even put a stop loss. Australian dollar, US dollar, I have no stop loss. I have a vision technique, and sometimes I try and picture the market going the other way, and frankly I just can't make any case where I see the Australian dollar versus the US dollar going higher. So that's what you should check out. Sign up for my 21 power strategies. This is a free handout that we give, and it kind of gives you an insight into my visualization process, which to my mind is a very powerful technique. I very oftentimes play devil's advocate. If I really like something, I actually try and draw the chart going the other way and see if I can make the case for that. And if I can't, then I get even more confident. So that's it for today. I'm just holding on to these positions, and probably will do so for the next couple of weeks. All right, guys, I wish you a healthy and prosperous trading week, and I'll speak to you next time.